everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothland, and it has been a wild couple of weeks. 2 weeks ago, big down week, looking fairly pessimistic. Then all of a sudden, last week, big bullish up moves, nice big green candles across the board, almost 3% gains for most of the major market indexes. It looked great. Now, what does the upcoming trading week hold? Heck if I know. I can't tell you which way markets are going to go because there's just so much uncertainty on the horizon. I can tell you, though, that there are several pieces of pretty critical information that we should be paying attention to. Number one, on Monday is the memorial of Martin Luther King, kind of honor his life and what he stood for, which is treat people with respect, and everybody deserves a fair shot at everything. Let's treat each other well. That's the core for humanity, in my opinion, as well. So that will be a closed day for the markets, except for crypto will be open, but everything else will be shut down for the day in honor of Martin Luther King. Then, of course, the big stuff that will be happening, which is not an every year event, that is going to be the inauguration of President Trump for his second term. Now, that will be happening on Monday, and it's going to be kind of an all morning afternoon thing, but it's expected that he's going to be inaugurated right around noon. It'll be 12 p.m. Eastern time. And again, doesn't matter what you think of him, whether you love him or you hate him, is irrelevant. Let's keep those thoughts to yourself. What's important is there is an entire regime change behind him. So it's not just Trump, it's J.D. Vance, it's also the Secretary of the Treasury, new chairman of the SEC, you've got new members in the House of Representatives and the Senate, a lot of major changes coming. Now, in my opinion, the first couple weeks after this is going to be very interesting. Lots of sharp market moves and no real direction as to which way they're going to go. It's going to be volatile. So I would encourage everyone to kind of take it easy the first couple of weeks here under Trump's new administration. Even though we know his old playbook, what he did from 2016 to 2020, still got to be careful because of all of the different political changes as well as the actions from Trump. As we know, he likes to talk a lot of bold actions which could create market volatility. So let's be prepared for that one. Regroup on Tuesday and start our trading week. Now, is there other stuff that's going on? Well, a matter of fact, there is. We'll dive into the earnings calendar here, which is pretty important for the week. Might remember last week we had some great financial earnings. Banks really reaping the rewards of these higher interest rates for the long term as that yield curve on the 10-year keeps surging, the 30-year keeps getting higher and higher, and the short end gets lower and lower. That's more profit for banks. So we have 288 companies reporting this week with really nothing on Monday because obviously markets are closed. It kicks off on Tuesday with Netflix, 3M, United Airlines, STX. We also have Keysight Technologies, Charles Schwab, and Interactive Brokers. And, I mean, that's a pretty chock full day, but it gets even better. You've got Procter & Gamble, Johnson & Johnson, Abbott, Progressive, Travelers. You have GEV, which is GE Vernova, and also Kinder Morgan. Now, of interest to me is going to be what happens with those two in the middle there, Progressive and Travelers Insurance, given what's going on with California. It would not surprise me to hear something said on the conference call pertaining to the damages that may be facing these insurance companies because of those California wildfires. So be very careful of that one. There may be some opportunities for big moves there as well. Now we shift things on to the final 2 days of the week. Thursday brings us Intuitive Surgical, GE Aerospace, Texas Instruments, Union Pacific, CSX, and Freeport-McMoRan. So a pretty good diversified amount of holdings there. And Friday brings us American Express, Verizon, Next Era Energy, and HCA Healthcare Group. That's been a pretty wild one over the past few weeks. Now, from there, we're going to start to shift to more international type of issues. Now, of course, we like to look at global events to see how different economies are performing and see who's the leader, who's the laggard. And one of those is services and manufacturing data. So this week, we do have quite a bit of services manufacturing numbers coming out. We'll start things off across the pond over in France at 3:15 a.m. Eastern time on Friday. We have their services manufacturing numbers coming out, followed up by Germany at 3:30, the EU at 4 a.m., England at 4:30, and then we circle back around to the United States at 9:45 Eastern time with our services and manufacturing numbers. Now, again, I don't believe that this is the monumental data that causes markets to go haywire, but it certainly could have an impact on all of you who are trading currencies in those countries. So if you're trading the euro, the British pound, I would expect to see some volatility on those currency pairs because of this data as people understand how healthy those respective economies are or lack of health may be. Now let's go back to the United States markets and we're going to talk about housing market sector. Not a lot of big news. Of course, we had construction spending and building permits last week. That was a pretty interesting data point to check out from the housing perspective. This week we have, well, one announcement, and that is our existing home sales. Right now, the expectation is we're going to go from 4.15 million home sales up to 4.19, so a slight increase. And of course, that is a good thing. However, let's keep in mind that the long end of that yield curve has been getting higher and higher and higher, meaning right now I believe the national average for a 30-year fixed rate mortgage is right around 7.5%. That's historically fairly high, 7 to 7.5%. So this could start to give us some signs as to a slowdown in that real estate sector. Of course, for those of you trading IOAR, you've seen some extreme volatility in IOAR as well, which is, of course, a real estate ETF. And then let's go to announcements from central banks. We got one more left here to talk about for today, and that is the Bank of Japan. Now, I think that this one is very important, more important than most of the data this week, because they're expected to go from 25 basis points to 50 basis points on Thursday. And this is a tentative meeting, so there is no real definitive time. Could happen at any moment. Why is this significant? It's significant because for those of you who trade Forex, there's something called the carry trade. When Japan was at negative 0.10 on their interest rates, big institutions could borrow billions of dollars very cheaply in Japanese yen. You come over and you buy US dollars, and then you buy a government bond that's paying 4.5%, essentially making yourself 4.6% rate of return for free. Now, all of a sudden, you're seeing some of those rates decline. Of course, it's been pretty choppy in the US. Our rates are starting to go up again. Now, all of a sudden, Japan raising their rates even more. That could put pressure on this carry trade, particularly if our long end of the yield curve starts to drop. That would force liquidate a lot of dollar-denominated assets to pay back those yen, and that could cause the dollar to tank a little bit here. So some unknown as far as market volatility, what could happen with this Japanese yen raising interest rates, but that should happen on Thursday. That's a tentative announcement, and of course, there's a lot more happening this upcoming trading week, but that's the big stuff. We hope that you have a fantastic trading week. Enjoy your inauguration of President Trump and see how that all pans out for the remainder of the year. We'll certainly have a lot more to talk about in our upcoming Monday Morning Must Knows. That'll do it. We'll see you next week.